So, parts of EM should do well. EM can itself piggyback on a weaker dollar as the US is less exceptional, but we do think it's important to be quite selective in how we play this in EM.
So how would you play this? Just give us your top picks in equities, FX, and rates, please.
Okay, so in equities, we are still holding an overweight in China. That's a call that Sunil has had, for example, from last April. We still think that in the context of where bond yields are in China, equity risk premium is basically close to 10-year highs. As you're seeing in the results this morning, for example, from Xiaomi, in the context of pretty resilient earnings in the tech space, valuations are still quite compelling. We're seeing that government bond issuance is rising at about 20% year over year. So there's a decent fiscal thrust from China, which hasn't been punished by bond markets so far, and is reasonably equity friendly. So we're quite bullish on the internet space there. Some companies like Tencent and Alibaba are top of the list there. Outside of China, a few parts of ASEAN, very cheap domestic scope for rate cuts as the Fed presumably shifts into a lower gear from September. And we do think Brazil is also quite interesting, particularly if you believe that oil prices may be nearing a trough. Then the currency screen is quite attractive on our metrics, has done for a while now. And there are some upside political risks in play next year as well. So that is a market that we've been overweight in debt and FX, but things are also starting to look more interesting on the equity side on a sort of 12-month view as well. In FX, we've got a little bit more exposure kind of on the crosses here. We do like trades like long Japanese yen, consistent with Shahab's views against the Singapore dollar. We think that Taiwan is probably not a good template to think across EMFX for various reasons that we won't get into. But some currencies like the Thai baht, which Rohit wrote about yesterday, Israeli shekel, they could be junior versions of what we saw in Taiwan. I wouldn't go that far, but there is a risk that they can be some of the strongest stories in EMFX over the coming quarters as we start to see this hedging behavior shift into a different gear. By contrast, though, there are some currencies like Mexican peso, Colombian peso, where we would actually recommend holding protection for different reasons. And in rates is our favorite asset class. It has been. We've been recommending since November to be overweight EM local debt relative to Japan. We still like that. In particular, I would highlight Mexico, Brazil, and Korea on the local debt side.
Okay, so local rates, the favorite asset class, and quite selective in equities and FX at this point. I'm afraid we're going to have to leave it there because we're already 3 minutes over the hour, and I want to be respectful of your time. I've tried to deal with most of your questions. I've presented them to this panel, but the ones that we couldn't get through, we will get your replies via email. All that remains for me to do is to thank everyone for making time for this panel, the speakers, and even more importantly, the listeners. Thank you very much for making the time. And until our next call, stay safe. Thanks a lot. Bye-bye.